$330 a share, basically a little over 10% higher from here. So it's not exactly like, everybody on the streets cheerleading this stock. Tell me about the rationale behind what you think the shares are worth right now. Is it basically just, hey, this is the market we're in and willing to pay more for these leaders of the digital economy, or something going on specifically at Facebook right now?
Well, there's two things, really. I think, number one, there is a lack of growth around some pockets of the market and an ability to pay for growth at reasonable multiples. This stock is still trading at multiples that are nowhere near where it's traded historically at different all-time highs prior. And the earnings power going forward on the other side of COVID-19, we look for continued 20% plus top line growth, continued margin expansion. So I think when you look at names not only like Facebook, but also Alphabet, we had notes out about both of them in the last 2 days, you're going to see a recovery in digital advertising. You are going to see some of the e-commerce themes that you guys have talked a lot about on CNBC today also play out, the forms of digital advertising being the enabler of those shifts to e-commerce. And with Facebook in particular, the reason why the stock has been so strong in the last 2 days has been they flipped the switch on this Facebook Shops product, where they're going to allow merchants and businesses to sell direct to Facebook users across both Facebook and Instagram. And Facebook is increasingly becoming as much of an e-commerce play over time as it is an advertising play. And that's what's attracting investors to relook at the name as well.
Yeah, on the e-commerce opportunity, you see that in your report here, you think it could be $10 billion in revenue for Facebook, let's say by 2023. Now, if the company as a whole is growing revenues 20% a year, revenue in 2023 is probably going to be $150 billion. So 10 billion out of 150. I just question what the market today should be willing to pay for that portion of the company's top line 3 or 4 years down the road. Is that really the specifics of a revaluation for this stock?
Well, I think it's one element of the revaluation. I do think, investors, especially in recovery names, are now going out to 22 and 23 and looking at a return to sort of core margins, core earnings power. What am I willing to pay for that? This is not one of the tech stocks that are out there that are just trading on revenue multiples or gross profit multiples. There's real earnings here. There's a lot of cash on the balance sheet. There's free cash flow supporting the shares as well. So I think there's multiple elements to the call. And I will tell you, the note we put out came out a little over a day ago. And I would tell you a lot of clients and a lot of investors believe that 10 billion could be too low, and that understates the opportunity. So, we did a sensitivity analysis. This is the number we landed on, and it's interesting to give you the feedback that many investors believe it could be a much larger number than that.
Eric, Julia here. I reported on that note yesterday, and it was interesting because you talk about the opportunity in e-commerce and how this is a huge potential for Facebook. But what I'm wondering is, do you see Facebook diversifying into actually generating revenue from the transactions themselves? Or do you think this is going to really be just about the advertising opportunity around e-commerce? Is this truly a potential to diversify revenue streams or just further the strength in advertising?
Well, it's a really interesting question, because I think there's going to be a couple of different forms of this. Not only is there Facebook Shops, which is them becoming more of an e-commerce platform. You could see companies like Shopify, and yesterday you saw an announcement from Big Commerce, which we don't cover, that can plug their merchants into this platform. That's more of a take rate model, where you can see Facebook itself being the e-commerce platform, taking a take rate. Those are things investors are more aware of that happen on platforms like Amazon and Alibaba. But then you could also see an environment where there's going to be continuation of growth in things like Instagram shopping, where that's much more of an advertising unit. When you look at your Instagram newsfeed and you see what looks like an advertisement that's trying to incite you or induce you to shop, that's an advertising unit. That's not e-commerce. So there's a number of different avenues, both through the advertising channel and the e-commerce marketplace channel, that they're going to be having some exposure to these themes going forward.